Morning, this is Steve Freed in Chicago with a morning grain comment. So, outside markets continue to trade the latest headlines on the coronavirus. The IMF warned that we can have a similar 2008 crisis if Europe doesn't act soon. We also note that traders yesterday rallied markets on talk about a U.S. stimulus package. But right now, there's no really details, which could be offering some resistance to the market. Crude oil is still on the defensive because of talk of Saudi Arabia and Russia increasing production over the demand and causing eventually prices to work even lower. Yesterday we had a USDA report and they didn't really make a lot of changes. So the number one thing is that they added to production in South America for soybeans. They're now talking about a 190 million ton crop down there this year versus 181 last year. But the problem is they only increase exports 2.5 million tons. So there's probably a little more room there for South America to increase exports. Argentina continues to be a concern because of strikes and because of issues with financial situations and whether or not down the road they're going to grow as big a soybean crops as in the past. Weather-wise, U.S., we're wet, and I think that a lot of people are saying both Europe and U.S. need to dry out in order to get crops planted on a timely basis, especially in southern U.S. Brazil and Argentina is dry, and so both countries probably could use a rain to finish their crops to meet the USDA numbers. We'll be getting some data today on U.S. ethanol. We're continuing to look at production stocks near record high levels, and ethanol prices are still a premium to RBOB gas prices, so that continues to weigh on margins. We did note that when you look at the Brazil corn numbers, that they actually might be a little tighter than what the market is trading, so we'll see if that changes any demand patterns globally. Market is still looking for export sales data out of the U.S. over the next few weeks to see if these low prices trigger demand or whether or not China comes in and starts buying U.S. ag goods. Given the negative atmosphere and the outside markets, the grains need some kind of demand news to support prices. Still, in general, if we have normal crops worldwide in 2020, prices are expected to turn lower later in the growing season. As far as prices are concerned, Argentina corn right now is being offered 20 cents cheaper than U.S. When we look at the month of June, South American soybean prices are anywhere from $325 to maybe $340 per ton versus U.S. Gulf prices at $347. And the one thing we did note that in the last couple of days, new crop Matif Europe wheat futures have been trading higher. And some people think you're putting a premium in those markets because of the wet conditions in Europe. So again, for 2021, we won't be getting a USDA number until May, but USDA is calling bean carryout 320. Guesses are from 320 to 520. Corn, the USDA says 2637 million bushel carryout. Guesses are 2,400 to 3,300, and wheat is 777. Guesses are anywhere around that number. But for all three commodities, the key will be export demand. USDA has some pretty high numbers in there, and we need China and other buyers to come in and buy that quantity, or these carryouts will go higher. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.